Perfect.
All right. Give me 1 second here. All right, gang. It is 3 after, so we should get started. Thanks everybody for being here today. Again, as those of you who have been with us the last few weeks know kind of my spiel here at the beginning, but I'm going to give it again because that's what I'm supposed to do. So thanks again for being here today. We're really excited about the topic that we're going to be talking about today. We're really excited that Kathy Kinder is with us today to talk a little bit about crisis management, and we'll get to that here in a second. But before we get started, just want to remind everybody that this is all part of the ISBDC's webinar series that we're running every Friday at noon from now until the end of March. And we're doing this because we want to make sure that we have resources available for small businesses to be resilient and recover through this trying time of COVID and the uncertainty of trying to figure out how to balance things that unfortunately we can't always control. And so that's what this series is about. Please make sure you invite anybody. This is open to any small business, anybody that could benefit from these topics. And so that's, at the end of the day, that's what we're here to do. And so that's why we're lucky enough to have Kathy with us today. She's the managing director of LiftBridge CXO. She'll tell you a little bit more about herself here in a second, but I just wanted to make sure that you all know that we'll be digging deep into kind of disaster planning, crisis management. How do you make that dollar last as long as it can? How do you stay in business when things are uncertain? And so with that, I will turn it over to Kathy. I'll stop my share here real quick, and then you can share your screen and take it from there, Kathy.
All right, thank you. Hello, everybody. Good afternoon. Let me see if I can get this PowerPoint up. Can you all see it?
Not yet.
Not yet. Let me see if I can get that done. Okay, I see it, but I don't know why it's not projecting.
If you go to your Zoom window and share the big green share screen at the bottom.
I did that. We'll try it again.
Try it one more time. I think last time we shared desktop when we did it.
Yes, here we go. We're getting there.
We got it.
All right, now, do you see it in presentation mode or?
Currently in presentation mode. Like you can see the next slides on the left side.
Well, let me see if I can do this. Make it, see if this works. No, okay, we'll just go to slideshow from beginning. We'll try that. Does that work?
It's showing your next slide. It's presenter mode, but we can still see the main slide large enough, I think, that it'll get you by.
Really? Okay. All right. Yeah, so anyway, we'll just do it this way. So just a quick intro to LiftBridge and what we do. And then from a CFO's perspective, which is what I am, and my partners are CFOs, we're going to talk about crisis management from a cash perspective, and then some just basics about disaster planning. So our managing directors at LiftBridge are myself, Kathy Kinder, Ashley Vukovitz, and Kay Whitaker. And I don't know, can you see the notes I have on these slides, Jeff? Or
yeah, I can.
Yeah, so they're just notes for me, but I don't know what I've done to make it present that way, but everybody will get the notes now. So, so I've been a CFO for early stage and growth companies, including Made to Manage, was an ERP provider, a long time indie software company. Consona Corporation and HealthX, which were also local. And Ashley is a CPA and was the former CFO at Interactive Intelligence. And she helped close their sale of Interactive to Genesis a couple of years ago as a over $1 billion deal. And Kay Whitaker is also a notable CFO. She was CFO at First Internet Bank when they went public as one of those companies you might recognize as a small business owner. So in our core values, we think this is important to share because this is how we drive our decisions and interact with our clients and so forth. Our 4 values begin with seeking the best solution for the client. So we know that sometimes we may not be the right solution, and we will try to get the correct solution for the client, either a referral or something along those lines. We also want to be creative and open-minded in our thinking. Many times CFOs are viewed as the CFNO or the sales prevention department, and that's not our goal at all. We want to help business owners be successful, and sometimes we need to listen to what those businesses are telling us and not come to a conclusion based on our experience. So we want to support our community, so many times we take calls just to provide free advice or give back to our community in other ways, and we want to take into account what we think our impact will be on the community through our work. And then tactful truth telling. We want to be straightforward and honest, and whether it's good news or bad, and deliver it in a tactful way to help the business owner make their best decisions going forward. What we do. So we're basically a trusted advisor. We are I like to use the term, we're a wingman of sorts to a founder or CEO. We touch in a lot of areas in finance and administration. So that always starts with the basic accounting. Now we usually partner with a company that specializes in transaction processing, but we will be engaged or a liaison between the small company or the early stage company and the other transaction processing company. But we add our value through, we can do analysis and forecasts for investor purposes, budgeting purposes, operating purposes. We've all been there and done that. We also touch on board engagement, how to best work if you have a board of directors, or if you need a board of advisors and don't have one, we can help you think that through and get what would be the good type of advisor to add on an advisor basis. We also can help with preparing for capital raises or understanding your cash flow and your capital needs as a growing business. Sometimes we can get involved in mergers and acquisitions. Each of us have done mergers and acquisitions a number of times, and we have a lot of experience there. We can help you manage your risk. So, internal controls on cash, on other things, on insurance, on employee engagement. A number of things fall under that category. If you have an accounting staff or a little bookkeeper or a clerk or somebody, we can mentor staff. And we are also a strategic partner when you want to think about how to move your business forward more from business model or market or things like that. So we cover a lot of areas, and I guess the last bullet or circle up there is administratively, we have contacts and experience with managing HR and other items. So how can we help you? So this is just a little slide to show where you might be on the scale, and if you're at a certain stage, you may need help in certain ways. Either maybe you're a worker bee over there and you're so effing busy that you can't get to the things that need to be done. So you need some help, or you have a bookkeeper that needs help. You need help on understanding your capital needs. You have accounting records, but you need help interpreting it, or you need your staff mentored by someone that's more experienced. And just quickly, last slide, I think, on us. So our technology, our industries of expertise include technology, of course. So we have a focus on technology, and we've done and worked with companies in these various areas. But we also have experience in other areas, including some of the things listed there and beyond technology. So thank you for listening to a little bit about LiftBridge CXO, sorry. And we were originally founded as CFO, but we're CXO now. So disasters and crisis response. Well, when I thought about this topic, I thought, what disasters have I experienced and or planned for before, and what was the major problem? So, you could unexpectedly lose a large customer, or perhaps that large customer goes out of business and they owe you a lot of money. What are you going to do? Or you have a key employee that leaves the company unexpectedly and you have a gap in getting things done. Maybe sales, maybe operations, maybe in product design. That can be a problem. Or working with technology companies, you could experience a data breach. And certainly that can be a disaster if you are a company that's been trusted with confidential information. You want to make sure that you have a plan in place to handle such a situation. You could have a physical thing happen to your workplace. Your office could be burglarized or flooded, or you lose your lease, or some other natural disaster could happen. And then there's the pandemic, and that came out of nowhere, and I think caught a lot of folks unprepared. So as a CFO, when I think about dealing with a disaster, I think of cash to keep operating. Cash is king. Also, I've heard this phrase, which I think is appropriate. Happiness is positive cash flow for a CFO. One of the things that you should think about, and maybe this isn't always at a disaster or a crisis, but maybe you should think about them as you're operating your business, is you always want to accelerate your cash in. So many times small businesses will have an accounts receivable with their customers. And quite frankly, some customers will wait until you ask for the payment before they pay you. And just looking at accounts receivable can be get low on the priority list when you're trying to run a business and make the sales and deliveries and so forth. But you really need to schedule some regular time to look at your accounts receivable, see who's late, and see what can be done to collect. And sometimes it's just an email or a contact to simply get them to prompt them to pay. Certainly you can engage a collection agency on past due accounts. Sometimes that's easier, or you can use the threat of a collection agency to get a customer to pay. Sometimes that's what does the trick. You tell them, this is the last request. If we can't get you to get your money in, we will have to send you over to collections. And that sometimes happens. You can also ask your customers to pay early for a discount or to clear a balance if a customer is questionable. If you think they're not going to pay at all or they're iffy, you can put some pressure on them and say, hey, just give me 80% and we'll call it a day. Maybe you consider modifying your payment terms. For example, you might have doing 30 days on your invoices, but then you change it to 15 and communicate that to your customers. And sometimes they'll get that in their accounting departments and the money will come to you sooner. Certainly, if you have a large order or an order that requires a lot of cash up front, it's not out of the question to ask for a deposit with the order. Many customers would expect that. You can also help get your cash in more quickly if you raise your prices. That gets a little more cash in as you go along. And I think a lot of companies set their prices and then don't do anything about price increases at all, and they operate at the same price for years. But all during that time, their costs have gone up. They've paid increases, salary increases to employees. Their raw materials have gone up. Their space requirements have increased. So consider putting in place a regular price increase program at a small amount. If regular price increases at a small amount, many times will go unnoticed by customers. Make it easy for the customer to pay you. So many times with the accounting systems now, you can have it set up where the customer can automatically pay you through PayPal, bank transfers, or credit cards, versus going through the longer process of creating a check and mailing it. Also, that will accelerate receiving it because the mail nowadays is very slow. So could get that money in faster. Factor your receivables is an option too. Yes, Jeff, do you have a question?
I do actually. So, and I apologize that I didn't let you finish the slide, but
No, that's all right.
what I've got is we saw a lot of modifying payment terms, especially early in COVID, people giving grace periods. As a small business, what would your advice be on how would you approach adjusting those payment terms for customers that owe you but may not have the cash at the current moment? Like, is there kind of a rule of thumb that you would try to stick to try to make sure that you don't put it off too far?
Yeah, you have to be careful of that because it'll become 30, 60, 90, never. So you don't want that to happen. You might, my reaction to that would be to work with your customer about getting a little cash up front so your risk is reduced, or offering to put them on a payment plan where they pay a little bit a month rather than nothing for 90 days. So it would be a negotiation, but you don't. So it's a balance between keeping the customer and the money coming in, recognizing that they have issues too, but yet getting some money for yourself because you have to deal with a pandemic issue too. So
perfect.
That's what I would recommend.
Thank you.
Thank you for the question. Another option might be to factor your receivables. So you could sell your receivables to a company that will, pay you a percentage, a relatively high percentage of what your customers owe you. They'll pay you money now, and then they'll take on the collection from the customer. And where they make the money is in the difference between what they pay you and what they collect from the customer. And another thought I had is if you have data that would bear this out and indicate that you could lengthen your hours and you would net more profits, that means you would have more revenue than cost if you were open longer, then consider doing that. All right. That's the cash in. That's the fun part. Trying to slow that cash out. That can be, that's usually, maybe more under your control because you can control this, but your others is, the cash in part is more about influencing and negotiating with your clients and your customers. So I recommend that if you are into a cash crunch because of a crisis or a disaster, that you communicate with your key suppliers about your status and your ability to pay in the short term. Maintain good communication with them. It would be important that if you make a payment commitment, that you try your best to complete that payment commitment It's all about your relationship with your suppliers. They will generally let you slide longer if you are consistent in following through on what you commit to. However, if for unforeseen circumstances you're not able to complete that commitment, then contact them right away and explain why and give the good reason. Also, ask vendors for discounts either on their existing payables or future purchases. They may want to keep a customer even at a discount and get some of their receivables collected versus losing a customer. Quite frankly, sometimes you can just slow pay your vendors. Just don't pay them on the due date. Just let it slide. And sometimes that vendor is not paying attention to their collections, and you can kind of stretch that out. You need to think about reducing discretionary spending. For example, travel and entertainment, no more employee lunches, no more travel to see customers, do everything virtually. It's even gone so far nowadays that you look to eliminate your office costs because everyone's working remotely. And then I would say if you're the founder and you might take a pay cut yourself, don't buy that boat. Just put that off so you don't have pressure on yourself to make as much money. Sometimes you're a company that has inventory. So you don't want your money tied up on the shelf in your warehouse. You want to, make sure you're ordering on time, but not too soon. And monitor inventory levels. And sometimes you'll have slow moving or obsolete inventory that's just money sitting on the shelf, can't do anything with it. Try selling it at a discount, at least maybe get your costs back or most of your costs back, and that'll help you with your cash flow. On the flip side, if your data supports it, you might decide to reduce your business hours. For example, if you are open from 8 to 8, but you find out that between 7 and 8, you're really not generating any revenue and your costs are exceeding the revenue in that hour, then don't be open that hour. Save the money. You could also consider using a business credit card to extend payments by 30 days. But of course, you've got to watch the balance, make sure that doesn't get out of control. But sometimes that's what you have to do when you're a small business and you're trying to survive. And then some other thoughts on reducing your cash out. Consider putting your payroll cycle on twice a month versus every 2 weeks or every week. This will result in a fewer number of paydays, and so it will just result in cash going out a little bit more slowly. It also reduces your cost to process payroll because you're doing fewer payrolls. So that's something that's an easy thing to do, and you can do that ahead of time. No sense in paying more often than you have to. Potentially you have a loan or an advance or something with your bank, and you want to, you're paying a high amount every month. Well, consider talking to them about lowering the payments. You could potentially extend that loan and stretch it out over a longer period of time, thus making the monthly payments lower. Or perhaps you're at a higher interest rate and you could ask for a lower interest rate, although interest rates are quite low right now. And then there's an option to, if you have equipment in your business, consider repairing versus replacing. Maybe slow your upgrade cycles. Maybe you got folks using computers that are adequate, rather than upgrading them, just hang on a while until your cash flow is more stable. And the last thing is, and this expense is typically the largest for a business, is related to your personnel costs. Can you find a way to reduce the number of staff that are needed? Perhaps you have to cut back based on the revenue you're generating. Or maybe you need everyone, but everyone needs to pitch in and everyone gets a short-term pay decrease. I've also seen situations where the management team takes a pay decrease, but keeps the line workers at the same rate to avoid turnover, which is also costly. So these personnel decisions are hard. They're hard for founders and managers, and because you affect people's lives. But sometimes these decisions have to be made to help the enterprise survive. But I'd also handle it carefully and potentially consult an HR professional prior to you taking action to make sure you're doing everything in an appropriate way. So I think that's the cash out portion. And just some ideas on how to stretch that cash so your business can survive. I also had some thoughts about just really simple basics about to prepare before a disaster. So I would highly recommend you keep a good relationship with your bank, the relationship manager that you work with on day-to-day things or that knows about your business. Make sure you continue to have regular communications. Give them an update on how well you're doing, or if the business is being impacted, let them know. If you can, while your business is running well, go ahead and borrow and repay money to your bank to establish a good credit history. That doesn't hurt, and it might come in handy later. Very important to have proper insurance coverages to cover things like a business interruption. Your business is shut down due to a natural disaster. This will help you get back on your feet and get started again. Potentially you need insurance for if you have an employee that has maybe not been as honest as they could have been and maybe embezzled a little bit of money. Maybe you need some insurance to cover those kinds of things. So important to have proper insurance coverages to help you get through those kinds of unexpected or unplanned things. Again, if you lost a key person, that would be bad. So cross-training of personnel not only will help protect against that, but it also makes employee engagement a little bit better because the employees are learning new things on the job. And so that's a good thing to keep in mind as a founder. You might also, obviously, this is prepare a disaster plan. So it occurs to me that, one of the things that a prior employer we had was a quite lengthy disaster plan in case of a data breach. And so you want to know who needs to be contacted if there's an issue. Make sure you have your contacts not only for your key employees, but your insurance agent, your attorney, those kinds of things. Make a list of things for actions to take in case of a crisis. You might consider who is going to be appointed for as the decision maker. If if there's somebody that's not available, kind of a backup on that kind of stuff. And there are disaster planning templates and tools that you could probably get on the internet. And I'm certain there are companies that help other companies plan for disasters. Usually those are larger, but small businesses can probably find a guideline online to help them kind of put the basics together. And my other recommendation is to keep a good relationship with your advisors, both legal and accounting, to help guide through, as we've seen with the pandemic, any government assistance programs. Everyone was kind of learning on the fly there to get those PPP loans and so forth. So if you have those relationships and they know who you are, you're likely to get more attention than somebody they're not familiar with. So I guess Jeff, those are the kinds of thoughts that came to my mind as a CFO as I was thinking about what happens in a crisis. Usually it means you have to have cash to to bridge you through the crisis to you can get back on your feet. And those are the kinds of things I have run across or done myself to help improve the cash situation for a company.
Kathy, that's fantastic. Thank you so much. And I think that I think it's helpful to be able to see everything kind of in bullet point, because you know this as well as anybody, that you get into those disaster situations and it's not that easy to just go, oh, let's think about it from cash in, cash out, and what things can I do? One question I've got for you, and I think this isn't really what we covered here, but I think it goes back to what you explained as far as your organization's core values and how you would recommend, especially a small business, to handle this. But as far as communication and transparency with your organization in a crisis, I think we've seen as a whole, you know, if you have to make tough decisions like temporary salary cuts or things like that, how do you suggest, from your standpoint, an owner or a founder kind of handle those situations when it comes to communicating with your team on making tough decisions like that?
Yeah, well, certainly employees will know that the company's impacted. Their imaginations will imagine everything worse than what is really going to happen. So I believe that as soon as you can communicate for certain, what your steps are going to be, then that's the best thing to do. I also recommend, just make sure you get some HR advice or legal advice on how and what you say to employees, because you don't want to get twisted up saying the wrong thing and the employee's counting on something and then having a problem afterwards. So I do recommend that, but I also recommend early, and then not only early, but often communication about the status. So you can't go wrong there.
Awesome. And one last question that comes in here, the relationship with a bank. We've talked about it in previous webinars that we've had so far. It's so important. But one thing that we saw, especially in the PPP, was the big banks were a little bit more challenging. Would you recommend having more than one relationship with a bank, or would you recommend sticking with a more local or credit union style bank for a small business? What are your thoughts there?
Sometimes I think it's kind of based on what business you're in. There are banks that are more familiar with certain industries. You might want to get one that's familiar with your industry. That's why it's easier to, they understand more quickly what you're dealing with and what your prospects are. I think it does not hurt to have more than one bank relationship. So I don't think there's a problem with that. For instance, you might have being from a tech company background, you might have a bank like Silicon Valley Bank that is well known to understand the technology world, and you can work with them about your status. But then you also might need a Huntington that's well known to have a lot of SBA loans, knows how to work with the government on those kinds of loans. So that's those are my thoughts on that kind of banking relationship stuff.
That's great. And, obviously this is a situation where it's not one size fits all, but I think it's important to kind of work through this, because we're all very sensitive to, we all live a new normal now. It's not what it used to be. So thank you for that. So that's it for the questions on our side. What I want to do just here to wrap up today is first thank Kathy for coming and sharing this with you. I think this is really beneficial. I think it's going to impact a lot of folks going forward. And so thank you for taking the time today to be here with us. Really valuable. And if you want to know more about LiftBridge or Kathy, please reach out. Her email was up there a second ago, but I can get that for you too. So please reach out. We'd love to make that connection. And then also, I always want to wrap these up talking about stayinbiz.org, which is the ISBDC's resource center. It's a one-stop place to be able to connect with, your local ISBDC rep, or the COVID issues that are out there that are going to help give relief, or just to connect. It's a great resource we've got here in Indiana, and it's something that I recommend everybody go to. And then selfishly, I also want to make sure I plug that all the attendees will get an email from us for a survey. We want to know if you enjoyed the content, if you thought it was valuable, if there is anything that we can do better, or if you have an idea for a future webinar. We've got a lot coming up, so we always want to make sure that we do that. And so please fill out that survey that you'll get early part of next week. With that, I will let us all go. Kathy, thank you again so much for being here. This was fantastic. Thank you for attending again this week. And please know that we'll be back here next Friday. Well, that's last week's slide. So next week's going to be working on, we're actually bringing in LivePlan next week, which is a resource that that the ISBDC uses. Their team is actually going to come in and talk about LivePlan, which is a resource for small businesses that is able to be accessed through the ISBDC. So please join us next week to talk with the LivePlan team. Thanks again, Kathy, and everybody have a great rest of your Friday.
Thank you.